One of the themes that we have been tracking and talking a lot about is this notion of consumers as a new class of payer. And what we mean by that is both consumers paying more out of pocket. As we all know, more of the healthcare burden is now being borne by individual consumers. But it also refers to this concept of consumers shopping. So given a budget, how can I actually go make the right selections for myself with various healthcare products and services? So in that vein, we all know that one of the most compelling examples of this trend is ICHRA, ICHRA, which we're going to unpack for the crowd. What are some of the factors that have led us to the system that we all deal with today in the employer-sponsored insurance world?
Yeah, it's a great place to start because when you really trace it back, the consumer started as payer in the 1800s and the early 1900s before we had insurance, before employers were paying for anything. They would just go to the doctor and pay out of pocket for services. And this was fine for a while, but as medicine got better and technology advanced, what ended up happening was you'd have a middle-class worker go to the hospital and have a bill that was going to eat up 6 months of their salary. The US, unlike most of the world, decided not to go with the government-sponsored healthcare program outside of the very poor with Medicaid and the very old with Medicare. There was this void that was left by the government, and insurers took note. And so when you actually looked at the very first forms of health insurance, really interesting. You had property insurers and life insurers try to get into the health insurance space, and they sold directly to consumers originally. But the problem was, well, it turns out the only people who bought health insurance, were already sick or they had broken a leg. And then 100 years ago, there's really brilliant insight at the time. Blue Cross, 1929, said, hey, maybe we sell to employers. There's enough of them that we can generate a pretty big risk pool. We have enough healthy people to offset the cost for the sick. Employers are looking for new ways to recruit and retain talent. And it was super logical. So 1929, we had our first employer-sponsored health plans with Blue Cross. And people forget, the first 10 years of it was like a super niche product that nobody used. And it wasn't actually until World War II where you had a lot of the labor market going to fight in Europe, and you had Congress issuing a wage freeze. And what happened was, because labor was scarce, but they couldn't raise salaries to get new workers, they had to find new ways to compete for talent, and health insurance was a way to actually have this loophole where we could give a better benefit, attract more workers. Congress got wise and they said, hey, maybe we should just make it pre-tax and then we won't have to worry about it at all. And so they did, and sure enough, 100 years later, we've kept the same system ever since. And so what kind of began as this genius marketing move from Blue Cross, and then kind of an accident of history with Congress and these world wars, ended up cementing this model that we have today that is very unique amongst most Western countries.
Mm-hmm. Fascinating. Very well said. One of the things that we find most attractive about this market is that how big it is, right? In most end markets in healthcare, you have a very finite set of buyers, right? If you're selling to insurance companies, there's only, a few hundred that really matter. If you're selling to hospitals, there's only a few thousand that matter. But in this world, it's literally millions, if not tens of millions of companies that could be the end customers, right? And so how do you guys think about that landscape? How do you think about who is the ideal potential customer that might benefit from some of these novel solutions like what we're going to talk about with ICHRA?
When we were starting Thatch, so one of the things that we were thinking about was we were building Thatch for us, which, at the time we're busy founders. We were trying to get healthcare for our team, get a group plan that worked for everybody. And we had a remote team and spread out across the country. And so we picked a plan out of Texas where Chris was living at the time. We started hiring people in New York and California, in Washington, and all over the place. And we found that experience was terrible. So we spent a ton of money on a health insurance plan. We thought we were getting everybody really great quality of healthcare. And people started at the company and nobody was happy because their doctors weren't covered or whatever. And so we really thought that was the segment that ICHRA was a good fit for, was early stage companies, distributed teams. The thing that's been surprising is, we've been kind of pulled up market. We're seeing more and more demand from larger and larger companies. And so on Thatch now, we've got, companies ranging from funded tech startups, Y Combinator AI companies, up to mid-market trucking companies in the Midwest, or solar installation, companies on the West Coast, or marketing agencies, dental clinics, and so forth. And we really think ICHRA is a fit for, companies of all shapes and sizes.
Mm-hmm. Are there broader industry trends or tailwinds that are impacting the way that employers are thinking about insurance that you think is creating this tipping point for the demand for new solutions?
Yeah, absolutely. The labor market has evolved quite a bit from a world where people stayed at the same job for most of their lives to one where today you see the rise of the gig economy and remote work and flexible working arrangements. But one thing that hasn't changed with it is the way we do health benefits. And so with the workforce more mobile than ever, you have this situation today where 1 out of 6 Americans actually stays in a job they would otherwise leave for fear of losing their healthcare coverage. One of the things that becomes really intriguing and interesting is what if, like a 401k or something like that, or an HSA, what if you could actually bring your healthcare coverage with you from job to job rather than being kind of shackled to your employer? And so as the labor market evolves, we see that as one big source of friction for the old model. We were literally just talking to someone today, funnily enough, who we had quoted this stat to, and what they had told us was this was actually the exact situation I was in because my wife was pregnant, and we had a very intensive series of procedures, and we had to stay at the job because if we changed jobs and there was some kind of disruption in coverage, a bill for delivering a baby, when you pay it out of pocket, can bankrupt you. And so that's one anecdote, and as a soon-to-be new father myself, one that really resonated with me.
So we're dancing around this concept of ICHRA. Why don't we go ahead and explain what is ICHRA, how did it come to be, and what is sort of the state of the state in the ICHRA market?
ICHRA is a law that went into effect 4 years ago that makes it possible for the first time ever for employers to, instead of choosing all the benefits for their team, just give them tax-free dollars that they can spend the way that they want. So rather than going out and choosing a group health plan for them, they instead say, hey, Julie, you get $1,000 a month and you can spend it on the health insurance and dental insurance you want. Jay, you get, $800 a month, you can spend it the way that you want. And the cool thing about ICHRA is the money that's left over, you can actually allocate to other costs too. So whether that's a prescription or, braces for your kids, or maybe it's therapy, whatever's important to you, that's the thing ICHRA lets you do.
And basically, like, just to put that into context, so like most of us work for a company where every employee is given the option of maybe like 2, maybe 3 different plans.
Like a one-size-fits-all thing.
Yeah, and it's totally monolithic. Everyone gets the same thing. And more so what you guys are saying earlier about just the trend towards remote work, even if you live outside of the state of the organization that you work for, you are still presented with basically the same plans. And so your networks are going to be constricted for that reason, et cetera. And so what you're saying is that this is a means to basically allow people to shop for plans that are sort of both personalized to their own needs and then also localized to where they live, right?
That's exactly right. And we've seen this trend play out in the retirement space with the evolution of the workforce. I mean, most listeners may not remember pensions, but they were actually the kind of default strategy that businesses use to help their employees save for retirement. And they were fabulously expensive. They required the company to actually manage it, in-house. And as the workforce grew more dynamic and went between jobs more frequently, it was harder to actually manage these funds, and many of them went underwater. And so enter 401ks, a way for companies to give their teams tax-free money. They could control and predict their costs more effectively. Employees win because they're actually able to choose a retirement strategy that makes a lot of sense for them. They could bring it from job to job. And today there's $7 trillion in 401k accounts. And so we're seeing signs that the same shift from defined benefit to defined contribution that we saw in retirement happening here in healthcare. And it's really for a lot of the same reasons, where the old mold is not necessarily fitting the emerging workforce as well as it used to. ICHRA in many ways is kind of this continuation of the idea of an HSA, where HSA, FSA focusing on out-of-pocket spend, but ICHRA instead expanding to the full medical spend. So that allows an employee to allocate between their out-of-pocket expenses and their medical insurance. It's almost allowing the consumer to realize an even larger potential with the sum of the money that they're getting access to.
So we've spoken about the friction of employer-sponsored healthcare for the employer and the employee. I'd love to dig into that. So a lot of times, we partner with a lot of entrepreneurs. They raise funding, they get capital in the bank, they start looking at their operating expenses, and they quickly realize that perhaps their first highest expense is employees, but number 2 or number 3 is health insurance, and they're shocked. And yet when you go down to the employee level, exactly as you described, There's high friction. You're not always getting value. And if you look at the data, employer-sponsored healthcare is outpacing inflation over the last 10 years, is rapidly increasing. So it feels like we're spending more and we're getting less. And then you present ICHRA as this idea that kind of unbundles and unlocks that. Is it a silver bullet? Help us understand what it is.
I don't think ICHRA is a silver bullet. I mean, the thing that you're doing is returning power to the people and giving them choice. So you're giving them healthcare dollars that they can spend the way that they want. The downside, or I think a lot of the criticism around ICHRA in particular, has been, if you have all of these choices, how does one know, how to spend that money? And so I think that's where technology comes in. And so we really think ICHRA is 4 years in. There's been some adoption, but probably not the adoption curve that folks initially expected. And we think that's mostly why, is the tools haven't been there to make it easy for people to understand, here's my budget, I'm going to choose these options, allocate it this way.
So let's talk about that. So you guys are a pretty unique team, healthcare domain expertise. We believe that Adam might be the only human on the planet who has actually worked at both the health insurance company and Stripe. And so you guys are taking a fintech lens to this problem space. So talk to us more about why is this a fintech problem, and what are some of the hard things that need to be solved by taking that unique approach?
Well, ICHRA fundamentally is give your team money to pay for healthcare, which sounds great in principle, but in practice, how do you give them the team, or how do you give them the money? How much money do you give them? How do you actually, ensure that they're spending that money on healthcare and not spending it on iPads? And all of those are technology problems. And so when we started building Thatch, going out to the market and talking to people who are trying to implement ICHRA and having a hard time, those were a lot of the problems that we were hearing. And so, we just started hiring great fintech engineers from companies like Stripe and Ramp and Brex and so forth that, really understood how to solve those problems.
Mm-hmm. You also mentioned that, we're only 4 years into this new policy being in place. And when you look back at the history of sort of novel insurance products in general, so you have things like Medicare Advantage, which was for the first time delegating private company sort of responsibilities for administering the senior insurance products. You also had ACA, which is obviously directly relevant to the ICHRA product, but you had the ACA marketplaces that went into effect with Obamacare. And in both cases, it took, arguably at least a decade, if not more, for those to ultimately get to sort of mass market appeal and true growth trajectories that made sense from a startup and builder perspective. So what gave you guys the conviction that perhaps that could happen more quickly in ICHRA, and what are you actually seeing play out sort of in the market that shows a higher trajectory than perhaps some of those other areas?
Yeah, it's a great question. And we really kind of see it as three reasons. One, which you alluded to earlier, which is just that the employer market is larger than Medicare, it's larger than ACA combined. It's just the biggest market. And so there's so much room for improvement. And then the second one being that, group insurance rates are rising at the fastest rate perhaps in history. And so ICHRA offers an opportunity to kind of solve this pretty hair on fire problem of bending the healthcare cost curve, saving millions of dollars. And for that reason, it's just such a compelling value proposition from a business perspective. But the third one, which really we're seeing from speaking with growth leaders at carriers and kind of really thinking through health plan strategy, is because Medicare Advantage is seeing such big headwinds, and because the ACA is kind of starting to slow down. I mean, Medicare Advantage had mid-single-digit growth last year. Certainly the ACA is slowing down. We're seeing maybe the enhanced subsidies will expire. So then the question that's on all the carriers' minds, okay, well, we're seeing stagnation in the ASO, kind of large group fully insured markets, small groups blowing up, MA,
Medicaid redeterminations.
Exact, Medicaid redeterminations. So where's the next growth opportunity? And there's only one pocket of growth that is small today, but is seeing triple-digit growth year over year. That could be that next big secular tailwind for the next 10 years. And as a result, these carriers are saying, I need to shift from thinking of ICHRA as a defensive strategy where maybe it's going to cannibalize my group business to actually, how can I use that to play offense? How can I get into those employer accounts that have been traditionally really hard to penetrate? And so the carriers that we're talking to are looking at it as actually, this is the only way we can grow. And for that reason, that's probably the biggest tailwind that we have.
Mm-hmm. It's a very simple product in many ways in terms of the concept, but in order to insert it properly into the ecosystem, you guys need to play with a lot of folks. So tell us a little bit more about the ecosystem and who needs to buy in and like play nice with you guys for this to ultimately work and get to scale?
I mean, technically, I think the biggest group that needs to play and work with us is carriers. And so we're integrating right now directly with a number of carriers to handle enrollments. And so, the world today is one where individuals with ICHRA typically have had to go to healthcare.gov and try and navigate by themselves with a budget. And so their employer tells them, you've got $1,200. I visit healthcare.gov. I try and pick from the list of plans. And then I have to manage the enrollment myself. And so instead, we think, the way that you scale ICHRA and really grow it is by integrating behind the scenes with the insurance companies and making it easy for people to come to Thatch. Now they just, pick a plan, select the health, dental, and vision they want, and then they get a debit card in the mail for the money that's left over. So carriers are a big one. And the other big one are banking partners, so that we're able to facilitate the money movement, handle the funds that are left over so people can use that at the pharmacy or paying copay or whatever it is.
I was going to add, it's following a similar trajectory, continuing the HSA analogy. So a close friend and advisor, Roy Ramthun, he's at the Department of the Treasury, oversaw the implementation of HSAs. And I remember asking him 4 years in, okay, you had your government projections, like how were they? Were they overestimates or underestimates? And he told me, oh yeah, we way overestimated it 4 years in. And I was like, oh, okay. And what about 10 years in? We way underestimated it. And we said, okay, well, why? And it was the exact answer to the question you asked around the different players in the ecosystem need to be becoming aware of it. So for example, with HSAs, first you had to build all this financial infrastructure with the banking partners. And it turns out just giving people the tax-free money to invest it is a little bit harder than it sounds. And then after that, you had to get the carriers to say, okay, well, I'll make less money on high deductible plans, but I guess I'll offer them so I can have them as a companion to these HSAs. Well, then once you have the carriers create the plans within, it takes 2-3 years more. Then you have brokers who are getting paid commission on those plans saying, well, I'm going to get less commission on the high deductible plans. Why would I push that? And then finally, after you kind of get them on board, you need to have employers actually have it work out and make sure it works with their payroll systems, make sure that the employees can actually use it. And that, because the buying cycle for these types of products is very annual around open enrollment, for that reason, it can really take multiple cycles before you start to hit that kind of minimum viable level of adoption and awareness. And so we're seeing a similar thing happen in ICHRA. The market's starting to feel a little bit more educated and aware. And sure, you have to realign the incentives a little bit and communicate it in a way that everyone sees it as in their best interest, which takes a little bit of threading of the needle. But we believe we're at this kind of tipping point in the market where everyone kind of sees it as it's here to stay, and it should be a core part of my strategy.
What could go right and what could go wrong with respect to policy, either changes or things that are yet to come with respect to evolving this particular area of regulation?
So kind of to our point earlier about having reached a certain level of market awareness, it's a little late kind of for the knife in the cradle. Like I think ICHRA is here to stay.
Patching, you mean?
But there are certainly things that are coming that could affect the business model and the market overall. And so one of those has to do with the Inflation Reduction Act subsidies during COVID and kind of the recovery period. The government created these enhanced subsidies for the individual market that allowed individuals to take advantage of more and more government help to purchase individual plans. And this had the effect of both increasing the total participation from around 11 to 21 or so million Americans. And that stabilizing effect actually caused the prices to go down in the individual market, which is where we get plans from. We don't necessarily serve up plans from healthcare.gov. We get them directly from the carriers. They're called off exchange. It's a minor nuance, but they do mirror the on exchange market quite closely. And so when you look at what the effect might be of those subsidies expiring, if fewer people take advantage of individual plans because they get fewer subsidies, the overall risk pool might shrink, and that might drive prices up, which could have ripple effects in the ICHRA market. I will say, from what we're talking with carriers, many of them for this coming year and the next year are already launching plans really only focused for the ICHRA market. And so we may see a decoupling of the on-exchange and the off-exchange markets quite soon. And then there are other potential kind of intriguing, more maybe like science fiction-y iterations to the regulation that we think are, could come in future administrations. For example, allowing ICHRA funds to be deposited, say, in HSA accounts, or to act more kind of like a turbocharged HSA, where you can actually keep the funds with you from job to job, which would be super interesting.
You're proposing a really interesting idea, which is more choice and more transparency in local markets for employers can bring prices down. What do you expect to happen at the local level? Will employers have more choice for the health insurance that they can buy? Will employees have more choice for the plans they can select?
It's a great question. So there's really two things that happen if this market really takes off. The first kind of is the continued decrease in prices, increase in quality, which are a virtue of the risk pool growing. So what happens in the individual market is not Cigna underwrites UJ and looks at you individually. They're looking at everybody who's buying individual plans in San Francisco and saying, this is a pretty big risk pool. We can spread the risk over a large number of people and therefore offer better rates. So it's really the exact same mechanism of the group model. It's just applied to this kind of individual rails. And so the more people that participate in the Thatch model, like the strands of straw in a thatch roof, grow stronger, better, et cetera. But when you play this forward, 10, 20, 30 years, one of the things that gets us really excited is this idea that it will be a lot easier to start a health insurance company and to create a competitive product. And so when you think about today, all of the major employer-sponsored health plans, Blue Cross, United, Cigna, Aetna, they were all founded before the internet, and there has been no new companies formed in decades. And the reason for that is it's very, very expensive to start an employer health plan. You need basically a national network to be able to support employers, because today the workforce is super distributed. You can have a great, Texas-based insurer, but if you have one employee in Georgia, you can't sell the group plan, because how do you cover that individual? And so if you have a large pool of people buying into this individual model, suddenly the insurgent health insurer can start up and target a local market. For example, in Houston, where I grew up, 40% of the population is Hispanic. Many are, speak Spanish as a first language. There's no Spanish-speaking health insurers or ones with Spanish-speaking doctor networks. But in this future, where you actually have people able to purchase individual coverage and pay for it through their employer, you can actually create these niche kind of differentiated products, and you see more competition. When you look at the employer market, the main way they create market value is healthcare costs go up, they raise prices, they have a fixed margin, they're getting no more efficient, and well, suddenly they're generating more profit, and so their valuation goes up. And so it's a really great business model. But if you had more competition, you'd actually have the opportunity to create value in the form of like increased efficiency, superior retention. So imagine I'm an insurer and I can keep UJ for the next 30 years. Well, suddenly I may make investments today that pay off in 10 years, knowing that I will reap the benefit of you being healthy over a much longer time horizon. And so in that future, we can actually harness the power of free market forces rather than use them to kind of hold America hostage in this somewhat of a almost oligopoly type environment.
I love that. So free market dynamics, more insurance competition. Tell us like one or two things that you guys can't wait to see consumers be able to do once this full vision of ICHRA's market dynamics play out.
I mean, a big area that we're focused on right now is how do we tell people, we have 40% of Thatch users are growing a balance month over month, meaning they're spending less on their health insurance than their employer provides for them. So they're growing these big balances and they're holding on to them. And we think the thing that's really cool is to tell people, hey, you've got $600 in your account. Have you seen the full body MRI that you can use, or a Grail liquid biopsy? And like those kind of things are both valuable for people, but also, could save lives. And so a lot of people don't even know they exist. Telling them you've got this money and here's somewhere that you can allocate it and get a better healthcare outcome really gets us excited.
We may actually see this unbundling of health insurance, where right now major medical covers the vast majority of healthcare costs. And if you look at a self-insured employer, the vast majority is going to major medical, covering those healthcare costs. And then they have a tiny little sliver for companies like Lyra Health in the mental health space, or fertility, or MSK, et cetera. One of the things we've seen is just a huge detriment to cost in the US is the way the pharmaceutical value chain works with PBMs and middlemen and a lot of the dollars extracted. And so wouldn't it be interesting if, you know what drug you want to buy, you can go to Mark Cuban's cost plus drug company, you get the silver plan, and you allocate the rest towards that drug. And so freeing up the medical budget to be allocated more efficiently in particular disease areas to prescriptions, super intriguing, and it might actually reshape how we think about the role of insurance as being more insurance than this like ticket to pay for everything.
There are a lot of skeptics out there who ask the question, are consumers actually good shoppers of their own healthcare? And many argue that they're not. And I'm curious what you all make of that.
I think, again, this comes back to the tooling problem, which is it's good for people to have choice. Everybody agrees on that. It's just if they don't have the proper tools to help them make those choices, then things get difficult.
And to the tools question, I mean, an analogy would be, okay, I want to book a flight to Fiji, all right? But like, there's one number I can call, and I have to, negotiate with kind of an unknown seller of the tickets, and they say, well, we can't tell you how much it costs until you land, and we can't tell you the airline, but you can show up at like maybe this time, and maybe it will leave at this time, maybe it will leave before or after, I don't know. And so you go, you show up on the plane, you arrive in Fiji, and you're like, okay, I made it to my destination, and they're like, well, congratulations, this will be $10,000. You're like, oh, wait a minute, I wasn't expecting to pay this much. If you just don't have the tools to do those things, well then, of course, they're not going to be a very good consumer. And so this isn't all in Thatch's purview. I think there's amazing companies in the portfolio like Turquoise helping to make prices more transparent. And our hope is that as consumers have access to more dollars, more solutions will pop up to make it easier for them to spend those dollars.
I love the optimistic future that we are all describing here. So here's to every employee having the opportunity to Thatch at some point in their careers.
Well, thanks so much for having us.
Thanks.
Yeah, that was awesome.